Traders Club. Welcome to the market update. And today we're going to make things simple and in brevity and in a succinct way, because I do have one of my friends, one of my close friends, visiting me here from LA, and he's gonna be here at my place until Sunday. So we got a place to go tonight, so I want to keep this succinct today and make this presentation probably less than 10 minutes here. I do have 2 slides, and I think it's gonna be enough for you to kind of understand kind of a long-term picture here, and that's something that I've been laboring to show you guys, to understand the primary term uptrend, right? And that I see a lot of fear, I see a lot of people whining, I see a lot of people scared, and it's always so easy to extrapolate. It's always easier to think that certain things gonna happen. Just remember what happened 2015 and 16, right? They simply didn't understand one truth, which is trend is assumed to be in effect until it gives us a clear signal that it has been reversed. And I've been preaching on this. There's a lot of videos I've done it. And if you're still questioning, then you're just talking with your emotion, right? And obviously, as of today, can you tell me that primary uptrend still valid? As of today, can we see a dive? Yes. Can we see market crashing from here? Yes. This is the exact same wording that I used in my 2016 video when I was coming to you guys that the trend was still valid, right? Go check in 2016 video 5 reasons. Five reasons why stock market crashed not, right? That's a 2016 video. And I use the same, basically if you just look at this right here and just not, just to say this was today, it's the same wording, right? Can the market crash from here? Yes, anything can happen. This is life, right? Anything goes, right? And I'll be honest with you guys. Sometimes, some of you guys, you listen to my video, and then I go through all these charts and I labor so you guys can fully understand. And then you get a 1 or 2 days of volatility, and then everything goes out the window, and you ask me something stupid. Please do not do that, because 1 or 2 or 3 days decline is not gonna dismantle a primary term uptrend. If you don't understand that, that's because you're a day trader, you're a short-term trader. You let the market get to you emotionally. And that's okay. If you're a short-term trader and you get scared, that's how you're gonna trade your stocks, that's great. But I want to let you know that I'm not a short-term trader, I'm not a day trader, I'm not even a swing trader, I'm a long-term investor and a position trader. Please put that in your head if you're, you have inclined to ask me stupid questions every single day, because you know who you are if you're watching it, right? Because sometimes I feel like I'm babysitting. I'm just being honest with you. I feel like I'm babysitting, and I don't have time for that. I don't have time to babysit. I'm an entrepreneur. I'm a business owner. I got things to do. I don't have time to sit there to convince you, certain things. That's why I do these kind of videos. And if you appreciate it, then that's great, and you can use it however you want. But ultimately, man, you have to make your own decision, investment decision, not to rely on somebody else and to try and, that's what I realize about people, is that if you're convinced of something, go for it. I mean, you saw my diamond journal post. I bought the dip. I don't start asking people like, what do you think about this? What do you think about that? If you're bearish, go bearish. If you're bullish, you go bullish, right? Anyway, so let's start with this one weekly chart here. So this is a weekly chart, S&P 500 spider, obviously, and going from 2009 to 2018. Let's talk this first. Trend is assumed to be in effect invalid until it gives us a clear signal. Clear, keyword clear. I've been preaching on this, I've been harping on this, I've been emphasizing on this since 2016. Since 2016. People who are saying something here, they're saying something here. People who are saying something here, they're saying something here. Keep it in mind, every single pullback, There's always some, aren't you tired of it? Aren't you tired of always living in fear? Please, maybe it's time for you to just rise up, break through, live free, right? Anyway, so trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Do we see any clear signal? No. Do we see some weakness? Yes. Do we see some maybe vulnerable look? Yes. But do we see a clear signal that it has been reversed? No. This statement, this paragraph that I just said, this statement that I just said, I said exact same thing in 2016. And you're gonna say, it was different this time, okay? This different. Well, you've been saying that every year, that's why you made no money. Anyway, so what I'm trying to talk about is this. This is what you call a consolidation, like a base. You know, you can call it a base. Some people call it a bear flag, whatever you want to call it. But if you just look at from 2009 to 2018 today, you can see. So this is how the indices like to move. When the indices goes up and then it consolidate, usually indices like to come down. And then when the indices comes down and it consolidate, usually indices go like to back up. That's how indices move, right? And again, that has been the trend. That has been the sentiment. That has been the attribute of this market since 2009. Here, I'll prove it to you. 2009, you can see right here, this thing pulled back, consolidated for several months. It got up. It got up and then it consolidated for several months. That's actually was 6 months and then it pulled back. It pulled back. It consolidated for several months. It got back up. And with some up and downs here, some consolidation. Actually, this was consolidation too. That was maybe about a month or so, maybe a month and a half. Pull back, consolidation, got up, consolidation, pull back, right? So that's what I'm saying. So when the market goes up and a consolidate, usually comes down. But when the market comes down and a consolidate, usually goes up. So you can see, even here, it came down and consolidated, and then it went back up here. Same thing is happening here. We made a really, really swift move. We pulled back. See, I would say this will be bearish. I can't say bearish, but it looks more bearish if you would have seen something like this. Right? It went up and then we started doing that at the top. Then I think there's a good chance it will pull back. And I think that's kind of a more of a vulnerable look. But we went up and pulled right back in. Pulled right back in, and you can see, and we've been consolidating for what, like a month and a half or so. We can also look at this in a big picture like this. If I draw, you can see, you can go with me, you can see I drew this rectangle pattern here. So now this is you can call a big consolidation. Big consolidation. So now when you look at a big picture, market needs to digest its gain, right? It doesn't go straight up. So you can see from 2011-12 to had a really nice move, known as the most hated bull market ever, because most people, the reason why they hated this bull market ever in that run is because they did not participate in it. Because I remember 2012, 2013, 14, 15, everybody was scared and they did not make any money. They lost money trying to short it. And then when 2015 and 16 came, everybody thought that the crash was going to happen. And so then they went in, all in for what? Big short, right? Big short. And then what happened? Market digested its gain, moved sideways. It was a big consolidation, digestion, right? And then what happened was digestion, sideways, consolidation, whatever you want to call it, digested for year and a half. And then that's a good time of rest for the bulls to rest. And with another great run, do you know anybody rode this all the way up? You probably don't, right? I did. Everything has been documented. I wrote this because I was able to see this, right? When everybody was scared, I was buying. That's exactly what I've done this year. When everybody was scared, I was buying. I'm still buying, right? And now we have about a year of consolidation, sideways, digestion, rest, whatever you want to call it. So you can see. So I dissected it, you know, and getting into these little bases, and also gave you a big picture. I got one last chart here and let you guys go, right? This is a daily chart, S&P 500. This is what you call bullish divergence, right? So you can see 2009, lower lows, higher low, bullish divergence. You can see 2011, lower low, or 2010, lower low, higher lows, bullish divergence. Can you imagine 2010 and 11? Because look at this head and shoulder formation. Because you remember in 2008 we had head and shoulder formation. That's what crashed the market in 2008. We got the exact same demon came right here in 2000. Can you imagine the panic of this retail buyers, these retail traders, right? And then what we saw, bullish divergence. Bullish divergence. Do you guys remember 2011, late 2011, right? Another head and shoulder formation, but this time we actually saw 25% corrections. Can you imagine, right? People thought this was gonna be it, that didn't happen. We actually saw this thing finally playing out, that head and shoulder formation, looking exactly like 2008 formation. So then people are waiting for what? This thing to just get another leg lower. But what do we see? Bullish divergence. Lower low on the price section, higher low on this indicator. And then with a very, very good move here. And finally in 2016, do you guys remember in 2016, the sentiment, the psychological sentiment of the market, 99% probable, 95 I said, 95% market participants were bearish. Everybody was scared shitless. Everybody was running around like with some panic attack. Just everybody was freaking out. They thought there's gonna be a global, not just US stocks, but global market meltdown. That's the word they use. But man, we had a bullish divergence there, and that thing just went parabolic, and everybody missed out. Why? Because they were fearful. Fearful people never amount to anything because they never risk anything. This is a reason why they're broke, because they never take any risk. They never go for it. This is a reason why they never do anything, because they're always scared. 2018, end of 2018 today, shenanigans been happening. Pretty much a consolidation all year long. Year and a half consolidation here, about a year and a half consolidation there, and we got about a year about consolidation here. But man, we have another bullish divergence, and look at that angle there. Higher low angle looks very similar to that. Look very similar to this, look very similar to this, look very similar to that. But as far as the price section is concerned, that looks a lot like, to me, late 2011. So late 2011, there's a lot of volatility, a lot of ups and downs here, as you can see right there. So that's probably kind of what we're similar to what we're seeing. But look at that, what we are seeing there. We've got a bullish divergence happening. So would you short it here? Would you go long here? You know? Would this fail? Could this be like one of those things where like, well, this time's different type of event? Because could be, right? Because I mean, nothing is guaranteed in the market. It could have been in 2016. It could have been 2012. It could have been 2011. You guys have a wonderful weekend, and good luck trading next week.